Good morning, everybody. This is Osprey from mychartcoach.com, and I'm just going to show you this. I'm going to do this quick video here just to show you the Nasdaq and the triple Q, and then the bull and bear ETFs to trade the triple Q. And so right now we've got a big drop in the Nasdaq. As you can see here, it's down 3 days in a row. It's breaking below the middle Bollinger Band, currently at 7,300. All the FANG stocks are under big pressure today. I'm going to do a separate FANG video. So what's going on now is it's heading for this 50-day simple moving average at 71.75. As you can see back here in June, that level held, and so it's going to be the big support level. Back on the March drop, you can see it bounced temporarily off the 50-day simple moving average, and then when it broke below, it got really moving to the downside. It ended up testing that 200-day simple moving average, which is currently down at 6,733. So if this 71.75 50-day simple moving average support zone fails to hold this week, you could possibly see a drop down to that 100-day simple moving average at 6,958. At testing that lower Bollinger Band at 70.59. And so it is, right now the Nasdaq's on a 3-day drop. Many times when you're down on a Friday and then down on a Monday, Tuesday can be a bounce day. So we'll be looking for a technical bounce off of the 50-day simple moving average tomorrow. If that level fails to hold, that would signal more downside risk. Okay, so take a look at the triple Q here. This is QQQ. It's hitting very oversold levels on Fasto. You can see it's down there at 485. And so last time it got down to this level, that's where it had the technical bounce off of the 50-day simple moving average back in June. And so that's the same setup that's going on now. You've got the Fasto below 20, and then you have the 50-day simple moving average set up to get tested. And so is history going to repeat? Is it going to bounce off of that level again? Or is this going to be a bigger pullback for the technology sector? So it's all coming down to 174.70. Trading below that level is going to signal more downside risk. Right now, QQQ is breaking that middle Bollinger Band at 177.78. If that level turns into resistance, that's the dotted purple line right here, a new downtrend could begin. So this is very important. It needs to pull a June type of move. If it closes below this 50-day simple moving average, as you can see back in June, it did not close below. That's going to be a bearish change in trend, and what could happen is you could get the lower Bollinger Band down here around 172 tested, and then it could also drop down to that 100-day simple moving average at 169. So that is the downside risk. This could be the start of a new downtrend for the triple Q. If you look at the 15-minute chart here, you can see it really started breaking down on Thursday of last week. That gap down open below the middle Bollinger Band was your sell signal if you were long. If you were long, the triple Q, when it got below the middle Bollinger Band and the 50 simple moving average, that signaled downside risk. It opened on Friday with a gap up open above both those levels, but then they pulled it back down again. If you weren't out up here once it got below that 300 simple moving average, that was a major red flag. That's where bullish stocks bounce off, or ETFs or indexes or whatever you're charting. And so dropping below that level, that signaled more downside risk. Now it's very bearish. It's coming down, trying to hit this 175 support zone. It can't heat up until it gets back above the middle Bollinger Band. The middle Bollinger Band is coming down fast. It's currently at 176.86. Needs to get above that level and turn it into support. Okay, so the play last week was SQQQ. Okay, so that was the that was the bounce play, and so we had put out alerts on this. It's now above 50 on our side. It's at 52. You've got Fasto at 94. This was a sweet bounce play setup last week. It was hitting the middle Bollinger Band currently at 1291, and now it's above that level. So if it can stay above that 1290 level, then it could possibly get a new uptrend going. The next key level to break is the 50-day simple moving average at 1366. All right, so if it can get above 1366, that's when it could run up to 15 and test that 100-day simple moving average. So if it stalls out like it did in June, that's where we're going to see if the QQQ breaks down below that 50-day simple moving average, then the SQQQ should be able to break above, and this should really heat up with a new uptrend. Now, if you look at the 15-minute chart here, you can see the chart really started heating up on Thursday of last week when it got above the 50 simple moving average. It's trading above that level, put it in play. It held when it was tested, and then if you didn't get in on Thursday, on Friday on this candle right here when it got above the blue line, that signaled it wanted to break out higher. That put it above all the moving averages on the 15-minute chart, and it's been bullish ever since. So what has to happen now, it has to keep on making new high closes, and so the closing price there at 1045 is now the key level to break. It needs to bust through this 1330, 1335 resistance zone. If it keeps making high closes, it can head higher. Once it drops below that middle Bollinger Band, currently at 1306 or so, that's where you could see it break down and consolidate and possibly test that 50 simple moving average. Okay, take a look at TQQQ. This was really the trade. The trade was to short TQQ. That delivered better percentage gains than going long SQQQ, and so SQQQ, and so this pulling back below the middle Bollinger Band on Friday was a red flag. It needed to bounce off of that level today. That's currently at 63.35. The drop below on Friday, that signaled more downside risk. Now it's hitting and trying to bounce off of that 50-day simple moving average at 60.56. If that level breaks, that's going to be a major red flag. Back in June, it did not close below that level. Notice they did not allow it to close below. The algorithms were set, the trading programs were set to load off of that level. That was the support level. That was the level they drove it down to, and it held. Now this time it needs to do the same thing if you're a bull. If you're a bear and you bought TQQQ puts, you're looking for a close below that 50-day simple moving average. If that happens, that's going to still continue delivering nice percentage gains for those put options, and you're looking for a drop down here to the 100-day simple moving average at 56. Okay, so if you look here at TQQQ, you could see here on the 30-minute chart, this isn't a 15-minute chart. Now this is a 30-minute chart because I'm going out 20 days, and I'm trying to show you the support level that's hitting. It's now below all the moving averages. It broke below the 300 simple moving average today at 62.34. It needs to get back above that level to get the reversal going. If that turns into resistance, that's going to signal more downside risk. It's trying to bounce off of support back here from July 6th. If this 60-50 support zone breaks, you could see a drop down here to 59 or so. It's looking very bearish right now. It had this rounding top, and like they say, stocks, ETFs, whatever you're trading, they stair climb higher and then they take the elevator down. Okay, and so congratulations to everybody that's trading TQQ puts. We put out an alert in the chat that this was going to be in play today, and now they're up 157%. If you'd like to learn some trading strategies for options, come check out the chat. We have some great information to share with you. Okay, thank you.